Welcome back to our channel Pro Knowledge Center, where essence is the career development. We move on. ABC अब बनेगा करियर, जोश पढ़ाई का आगे बढ़ने का, जीत पक्की. Basic to Advanced Banking and Finance Awareness is a program that takes into account of series of question answers and including explanation and descriptive questions. Question are going to be answered in due course. As we see the various topics here, history of Indian banking system, right from Indian banking system, that history from those days of 1760 or something like that till these dates, modern banking, and these topics like RBI Act is there, functions of RBI, then Banking Regulation Act, objective of Banking Regulation Act, and various provisions of Banking Regulation Act. Then various committees where a very important act is about payment and settlement system and the establishment of NPCI and banking commissions. Various committees were appointed from time to time. Those committees have given their opinions, their recommendations. Those things are also we are going to cover in due course of time. And get ready for action. That is what we say. And it's a very simple question. It's very, we started because the first thing is that we start from very simple question. This type of bank account is mostly operated by students, non-trading firms, pensioners, and working professionals. They are individuals and current account. The options are current account, fixed deposit, demat, or saving. The purpose is saving. So the nature of account is savings account. An individual or two people jointly can open the savings account. The objective of this account is to save money. This account carries interest, maybe 4% or 5%, 6%, something like that. It carries interest. Started, and when was the UPI? Regarding UPI, Unified Payment Interface, first introduced in India, and the options. We are going to see the options because this man is asking for options. The options are 2014, 2015, 2016, 2017. So let us see the answer. It's 2016. C is the correct answer. 2016, when UPI started. A loan facility, it's a type of loan facility granted to a customer in his account, allowing him to withdraw up to a certain agreed limit, repayable on demand or at the expiration of agreed period is called. That type of loan is called, whether it is interest-free loan, whether it is term loan, personal loan, or overdraft. Question is the question is a loan extended to customer in his account, and therefore the answer is overdraft. Department of the RBI is responsible for issuing currency notes. Currency notes. Which department is issuing the currency notes? The options are banking operations, communication departments, corporate strategy, or none of the above. And so far as the answer is concerned, it is the issue department. Therefore, it is none of the above. The issue department of the RBI is responsible for issuing currency notes. Therefore, the answer is D. We proceed to the next question. Demat. It's a very commonly used term nowadays. Whether it is demonetization, whether it is dematerialized account, or another account, or none of them. Demat stands for. The answer is D. Dematerialized account. In case of demat account, shares and securities are held in electronic. Next question. Which section of the RBI Act provides that the RBI has the exclusive right to issue currency notes in India? Currency notes are issued by RBI. 19, 21, 17, 22. And as we go to see the answer, is D, 22. The answer is D. 22. RBI has the sole right to issue banknotes in India as per Section 22 of the RBI. Monetary policy of the Reserve Bank of India aims at. Monetary policy of the Reserve Bank of India aims at the objective. What is the objective of monetary policy of controlling the credit of government banks, managing forex, managing the quantity of money? As we see the answer, because this is what the question is. Monetary policy, it is related to monetary policy, and it aims to manage the quantity of money. The monetary policy of Reserve Bank of India aims at managing the quantity of money. The management of quantity of money is important to meet the needs of different sectors of the economy and to increase the pace of growth. This is about the so far as the objective of monetary policy is concerned. Answer is C. There was one committee, SM Kelkar committee, appointed for the purpose of whether it was appointed for working capital lending norms or RRBs, establishment of RRBs or customer improvement in customer service or review of credit appraisal methods. This committee was appointed for the purpose of number A, option is A, working capital norms. Move to the next question. The amount of company's profit that the board of directors distributes to ordinary shareholders. The shareholders, they are the beneficiaries here. From company's profit, certain amount is given to them. The amount of company's profit that the board of directors distributes to ordinary shareholders is termed as, whether it is termed as salary, whether it is termed as wages, whether it is termed as bonus or dividend. Is dividend. It is a regular profit sharing payments. It is made between investors and the company. The board of directors of a company decides when and how often dividend payment should be made. The company which declares dividend can provide a stream of income. The provisions with regard to dividends are contained in this brief about dividend. We proceed. Contract, whereby a person deposits an article or goods. He is taking loan and he is depositing goods with a lender as a security for something or for performance of promise is termed as a contract. What is a contract? He took a loan and gave it this and gave security to the bank in the form of goods. So whether it is hypothecation, whether it's pledge, mortgage, or lien. And the answer is, it is a pledge. Answer is B, pledge. People with an account in these banks cannot apply for loans or credit cards. Small finance bank, payment banks, scheduled banks, or non-scheduled banks. They cannot apply for loans or credit cards. Only they can make payment. So therefore, obviously it is the answer is B, payment banks. Payments banks are new model of banks. These banks cannot grant credit and issue credit cards. They can issue debit cards and extend online or mobile banking services. This is about payment banks. The first payment bank of India is the first payment bank, whether it is Pino Payments Bank or Jio Payments Bank, Paytm Payments Bank or Airtel Payments Bank. There is D, Airtel Payments Bank. The first payment bank of India is Airtel Payments Bank. It was launched by Bharti Airtel in September 2016. It went live with its pilot project in Rajasthan in November 2016. Next question. Government decided to set up local area banks in 1996 with an objective to mobilize rural savings or extend loan to SMEs, extend loan to farmers. No. Local area bank. The objective of setting up of local area bank is, what is the purpose? Purpose is to A, B, C or D. It is A, mobilize rural savings. Related question. This is money laundering related question. In banking, the following activity is indication of money laundering. Whether it is unusual cash withdrawals, deposits, the non-operation of accounts, non-compliance of KYC guidelines, or none of the above. So one can, if one goes through the definition of money laundering, then it becomes very easy to understand this question and the options also. We see the option, we have seen the options, we see the answer. Indication of money laundering, unusual cash withdrawals and deposits. Who decides? It's a simple question again. Who decides on the quantity of coins to be minted? Central Bank, RBI, state government, president. The options are this, and the correct answer is RBI. Question we have seen is minted, and the answer we have seen is question is Madhav Das committee. One committee was appointed, and that committee evaluated the role played by Madhav Das committee evaluated the role played by whether it is A, B, C, D, whether A, RBI, commercial banks, urban cooperative banks, or regional rural banks. Madhav Das committee was appointed to evaluate the role played by urban cooperative banks. It was appointed and it gave its report in 1979 evaluating the role played by urban cooperatives. It gave details of their contribution and roadmap for their role. It suggested for support from RBI and government to establish such banks. This is about Madhav Das committee with regard to urban cooperative banks. Offer of new shares to existing shareholders is called. New shares are issued to existing shareholders, whether it is IPO, initial public offering, rights issue, bonus issue, or scrip issue. These are the options, and the question is with us. Options are with us. Offer new shares to existing shareholders, and the answer is rights issue. Rights issue gives preferential treatment to existing shareholders, where the shareholders are given the right to purchase shares of the company on or before a specified date. It results into increasing share capital depending on the ratio of rights issue. This is about the question. Question क्या है? The question. Offer of new shares to existing shareholders is called as rights. The answer is rights issue. KYC is easy question. We have been seeing it, we have been hearing about it a lot. KYC guidelines were introduced in India by which of the following institutions? By which of the institutions? Given institutions, Central Bank, Finance Ministry, SEBI, or RBI? Whether it is central government, Finance Ministry, SEBI, or RBI. And the answer is RBI. The certainty of payment in the case of certainty of the payment. Surety is a guarantee that yes, payment of this instrument will be made. Whether it's demand draft, check, promissory note, or none. Now we see the nature of this document, wherein payment has already gone to the bank and some instrument has been issued in favor of some third party. That kind of assurance is given by the bank. There is certainty of the payment in case of whether it is demand draft, check, promise. Check is issued by an individual, promissory notes issued by an individual. There is a certainty of payment in case of demand draft because demand draft is issued by the bank and amount is already deposited with the bank. So this is the case of demand draft. The validity of check is going to be it is very simple question. It is because earlier it was 6 months. Now it is 3 months. The validity of check is 3 months from the date. Credit rating agencies are regulated by which of the following? Okay. Ministry of Finance, Ministry of Corporate Affairs, SEBI. Credit rating agencies related question. The agencies are regulated by RBI, Ministry of Finance, Corporate Affairs, or SEBI. SEBI. SEBI regulates the credit rating agencies because the agencies are regulated by SEBI Credit Rating Agencies Regulations 1999, the SEBI Act 1992. SEBI regulates them. This is about question. Credit rating agencies are regulated by SEBI. Again, another question on we saw the definition and now we are seeing here also the process of concealing the source of money received from illegal sources and converting it to a clean source is known as, that is, diversion of fund, tax avoidance, tax planning, or money laundering. In one of the questions we saw about this particular aspect of unusable cash deposits and withdrawal. Now if we go to that part, here we are seeing that the process of concealing the source of money, hiding the source of money received from illegal sources and converting it to a clean source is known as simple. Option is D. Is the money. We move to next question. ALM in banking stands for liability management, asset liability, asset loan management, asset liability measurement. ALM in banking stands for asset liability management. Financial institutions follow the practice of asset liability management to reduce financial risk, which is resulting from a mismatch of assets and liabilities. It is introduced, this ALM has been introduced, this practice has been introduced to maintain the healthy spread between assets and liabilities to enhance profits and manage risk in a better manner. So this is about ALM. ALM in banking stands for, ALM in banking stands for answer A, asset liability management. Banks and financial institutions follow this practice of ALM to mitigate financial risk resulting from a mismatch of assets and liabilities. Very important question this is. Act provides for anti-competitive agreement and abuse of dominant position. Which act? Anti-competitive agreement. The agreement which prohibits, which says that there should not be any competition, that is prohibited here. Abuse of dominant position is also prohibited, whether it is Companies Act, whether it is LLP Act, Competition Act, or none of them. Very interesting question this is, and this is very interesting act also. One should go through the act also. So we see that the question, the answer is the Competition Act 2002. This act was passed by Parliament in the year 2002. President accorded consent to the same in January 2003, and it provides for establishment of Competition Commission of India, CCI. The CCI aims at establishing a competitive. The role and functions are like it prevents practices that harm the competition, it promotes and sustains competition in markets, it protects the interest of consumers and enforces freedom of trade. So this is very important act, Competition Act 2002, and it was passed in 2003. It was passed in 2002, but the president accorded assent to the same in January 3. And for the purpose of establishment of, establishing a competitive environment, this act was introduced. Now, when the banks issue guarantees, it's a question on credit facilities now. When the banks issue guarantees in which they agree to compensate against non-performance of the bank, such guarantee is called as guarantee, bid bond guarantee, retention money guarantee, or performance guarantee. When the banks issue such type of guarantees in which they agree to compensate against non-performance of the party of their customer, such guarantee is called as A, B, C, D. The options are financial, bid bond, retention, or performance guarantee. And we see the answer. It's a performance guarantee. Here is an example. ABC Bank issues guarantee on behalf of its customer XYZ, who is a contractor to construct 100-kilometer road in 36 months, 3 years. ABC Bank will have to compensate the beneficiary if the road is not constructed by XYZ within 36 months, or such time as may be extended from time to time. As per terms of contract. This is about performance guarantee. So these questions are we have taken from banking and finance. It's a very vast field, and we are going to continue with the same. And our goal is whoever is pursuing the career in banking, finance, and such other fields, including legal, that we continue to share the views and continue to share the knowledge. That is our goal, objective, purpose, vision, and all these things. We take a stock of the questions which we have taken today. Right from certain committees, we took certain committees. Then we also spoke about the type of account, then demat account, then guarantee, nature of facility, and all these things are there. And in the next session also, our questions will be based on such topics. Question is, recently the government has constituted a committee led by Finance Secretary T.V. Somnath to suggest ways to reduce NPAs in banks, implement digital banking, offer recommendation to enforce the KYC mechanism, suggest ways to improve enforcement of security interests. Recently, the committee has been appointed, and we move to see the answer. It is appointed to offer recommendation to enforce the KYC mechanism. Question was about appointment of the committee led by Finance Secretary TV Somnath to offer recommendations to enforce the uniform Know Your Customer mechanism. This is about question number 6. Thanks for watching.